I've had accidents in the past, and it's cost me not a ton of money because of the way that I filed my claims. I've seen other people go in financial ruin because of one claim. I'm going to explain the different levels of claims today, and we'll go over how to overcome those and what steps you can take to prevent paying a lot out of pocket after an accident. So there's three main pieces to claims. You have a not at fault claim, you have an at fault claim, and then you have a comprehensive claim. Now, comprehensive is the most common and the least expensive on your insurance policy. Depending on the state, if you're in a state like Florida, you're probably paying a ton for comprehensive because wind and hail is a big problem in that state, and there's a lot of damage because of that. So in that case, that comprehensive coverage is going to be expensive on your insurance policy. For most other states, that's not going to be an issue, like in Michigan. Michigan doesn't care a whole lot about comprehensive because those claims are so few and far between, apart from hitting a deer that jumps in the road, then it's not that big of a deal. If you file a comprehensive claim, you've got to know what type of state you're in. For the states like Florida and Texas, they allow comprehensive claims to go against your policy. For states like Michigan, they allow the insurance companies to choose what they do. Some do and some don't. So it's not just state specific, it's also company specific. Do they want to charge for a comprehensive claim? Mark, why would they charge me for a comprehensive claim? That's ridiculous. It's not my fault. Tree fell on my car, whatever the case was. It's risk. They're assessing the ability and the chances of a secondary claim to have happen. That's why all of these companies have different prices, because your State Farm may not have a risk. They might be perfect with comprehensive claim. Tree fell on your car? Yeah, whatever. We've seen 1,000 trees fall on cars, and 99% of them were our customers, so we don't have an issue there. Allstate may have the same exact situation, but that 60% of the people were their customers. Now they may raise the rates based on their algorithm that tells them, hey, if they have a comprehensive claim, odds are our normal customer is going to have a second claim within the next year and a half. It's not perfect. It's going to estimate it, but it's like watching the NFL. You know that when you're betting against the NFL players, they put the odds by 1% or 2% in their favor, and that's what they're trying to do. They're trying to plan, how can we make a profit so we get that 1%. I know everyone thinks it's 80%, but we get that extra percent in our favor, and the rates are based off of that. Having those type of comprehensive claims can cost you. It's not a ton, though. The comprehensive claim is not going to be that 30+% increase in most cases. In most cases, if you have a comprehensive claim, you may see about a 10% increase on your policy. However, check with your insurance company. Most of them don't count this against you, but some have a claims-free discount. And if you file the comprehensive claim, technically you're filing a claim. Most of them don't count the first one against you. Honestly, I don't think any of them will, but you check with your agent and check with them first to make sure it's not that they're counting the claim against you, it's you're losing a discount for not having claims. The second part is also not that big of an impact. You're going to see about a 15% increase in average from what I've seen from states that actually count them against you. They're called not at fault claims. Very similar to comprehensive claims, but they're more likely to happen where if someone hits you, that's telling them, okay, based on this location, based on these drivers, here's our risks. Okay, here's what this person pays. It's a good price. It's not a good price. Whatever the case is, you bought it. You have that policy. You have an accident. That risk pool changes. You've now switched what's happening with your insurance policy. Now, they can't do anything right away. They have to wait until the policy renews, but once that renewal comes in, they may or may not count that against you. That's one of the reasons having an agent that knows what company is the best fit for you makes all the difference in the world. For example, if you're a clean driver, we know that there's certain companies that if you haven't had claims or any accidents in the last 3 to 5 years, you'll get a longevity discount. You'll get another discount for claims free, but you also can qualify with some companies for accident forgiveness. So regardless of even if you're at fault, we can just wipe that slate clean. They won't rate increase the policy because of that one term. There's more, then obviously that changes the situation. But in that generality, you may be a good fit for those types of companies. That doesn't necessarily mean you're going to pay extra because of that. So talk with your local agent to find out if those are fits for you. If you're not quite sure if they understand what they're doing, I'll put a link in the description below. Most of your independent agents are going to be the ones that have that access and have that knowledge, because if they've been doing this for several years, which is what I try to get you in touch with either us or people that are in states that are licensed in your states that have been doing this for several years. If somebody knows what they're talking about insurance, I want you to talk to that person. If it's your agent, great, go ahead and do it. Otherwise, I'll put a link in the description below where you can do a quote with either our company or people that we have worked with. It's companies that have been around for at least 2 years or more, so they should know what they're talking about as far as researching these pieces that we're explaining. So wait a minute, you said it's only going to go up 15, 10%. It can vary. It can even go higher, like Texas, for example. Like we said, they have a no-fault portion of their state, but they typically, at least in my experience, have counted comprehensive or not at fault claims in their policies. Now, those companies, in most cases, can say, no, we just don't want to count them. That's like we're saying. That agent in the link description below, if you've had one, might be the best fit to talk to. The other part of that is that little caveat. Like I said, there's 7 technically pieces of this. This is one of those 0.1 pieces, is that if you have a claim less than $1,000, if the claim is very minimal and not a major claim, then most companies actually have these thresholds. For actual accidents, like not comprehensive claims, usually it's $2,500 or lower. If it's that low, they don't take that as big of a risk because sure, they had a small fender bender, they claimed on their policy, that happened, we're not going to rate that as heavy. If it's more than $2,500, a lot of these companies have a higher increase. States like Michigan, if you have medical added onto it, that's an unlimited claim that could go forever. That means they're likely going to have some sort of extra weight with that to where the premium, that risk pool, all of those pieces that you had for your profile, your credit, your car, your location that you live, the number of drivers, the access, the road you're taking, all of that stuff makes your profile, it's changing. So they've got to find where that best rate fit is for you. And that's, like I said, it's not necessarily a bad thing. Although the price going up can be considered a bad thing, but it's not a bad thing in the insurance eyes because there's multiple companies that are okay with that type of stuff. It's unfortunately one of those things. I personally, when I had my claim, stayed with the company I was with. I liked what I had, the package, all the benefits, and I paid the extra 10, 15% for the last 3 years. I'm okay with that. For other people, if it goes up 30, 40%, that's probably not okay with me. I'm going to have to shop around, and then I shop with those multiple companies that we work with to find out which company has the next best fit, who am I a fit for in those scenarios. So then the last piece is the collision. If you have an at-fault collision, now this piece matters because this is the highest risk. If you go online and search it, you can ask Google, you can ask Chat, you can ask all of these places. Most of them won't give you a percentage. It's so swung left or right, up or down, whatever you want to call it, based on what the actual occurrence was. And in 9 times out of 10, if it's an at-fault claim, most of the time you're going to have that be over the $2,500 threshold, so you're probably going to have that higher rate increase. Now, I did do some research. I went to III.org, which is a main resource for insurance. I went to Consumer Reports, and I was averaging what everybody was saying. And based on that, it can swing anywhere from 10% to 50% of a price increase. The average being 30 to 40% increase. I can confirm that on average, I tell customers it's probably going to be a 30% increase on your renewal. Now, keep in mind, that's if your company pulls it. They probably will. So I'm not trying to trick anyone into this piece to make you feel better. You claimed it with them. They're likely going to pull it on the renewal. But it used to be that sometimes they wouldn't pull them, and it would be a whole nother year before you had to renew where you got away with it, essentially. You didn't have to pay that extra increase. And over time, that increase went away. So what can you do to combat this? It's a known piece in the industry. If you have a claim and you know it's going to impact your policy, if 20 to 30 or even 40% is too much, you can't afford that, then it's time to shop right now. You can still file the claim with the current insurance. I know it sounds a little bit shady to do, but these insurance companies know that this is not a law. This is not against any rules, any guidelines. It's you taking what you have now, moving to another company, because some companies don't have requirements that you have to list a claim. Most of them do. They'll ask you, have you had any claims or accidents in the last 3 to 5 years? If that's the case, then be honest with them. But in cases, some companies 100% go by what's called an MVR and a CLUE report. That CLUE report is pulling accidents and claims. If it doesn't show up on there, which is why you shop sooner rather than later, because it likely won't show up. It's not a filed, closed, or open claim, so it's not likely going to be there. I've had companies take them off, even though I've said, hey, this guy has an accident. He just had one. They're like, don't care. Our system goes by that CLUE report, and if it's not on that CLUE report, we don't care. Guess what? If they like the area you're in and they like who you are, your profile, all of that fit, they may go 3, 4, or even 5 years without rating that claim because they don't pull the data constantly. It just depends on the location of the cycle. There's no way to know that part. But if you get a better price with that next company and you join them new, odds are they're probably not going to pull that report the next year unless they have some sort of ruling where they pull the reports the first renewal or whatever the case is. So you may actually be several years paying less without having the headache of coming out of pocket. If you are having struggles with claims, I'll put a how to handle claims adjusters here. There is some advice there that I would say that you should go through as far as that process. Like I said, if you are looking to shop, I'll put a link in the description below. Otherwise, if you're just looking for some knowledge on the insurance industry, I'll put a video that YouTube is going to recommend that you check out as well. I'm Mark with Think Insurance. I'll see you in the next one.